Hello everyone, welcome to the Ichimoku daily analysis for the Aussie dollar US dollar FX for Monday, June the 18th, 2012. Well, a continuation of the trend to the upside today. We have a candle that's made a higher high and a higher low. A very small wide body candle, however, and that does suggest that we may not see continuation of the trend. Previously we had the trend moving to the upside with two large white body candles. White bodies denote the buyers being in control, and quite a large amount of control on the day between the open and the close, making solid net bullish progress. Today they've only made a very small amount of net bullish progress. Now, even though the buyers have made a very small amount of net bullish progress, we have seen them close with control of this market by closing up towards the high. So if we look at the last three candles, the buyers have maintained that control for each trading period. However, this does set the market up for a potential change of trend. It's very similar to a hanging man type pattern, so we do need to watch the low of the current candle for a potential lower high and lower low. Now, the market traded right to the 101.44 region that I've highlighted previously as strong support and resistance, and we're seeing the market find resistance there, some selling coming in. So moving forward tomorrow, that is a very strong level. We also have close by resistance now at the cloud, and that's very important, very strong resistance, and the 102.18 level. Down below here, we've seen the market rejected from the 100.43 level, an important level previously, with today's candle, and this large shadow on the bottom of the candle represents the sellers losing commitment. In terms of the pattern that I highlighted previously, this ascending triangle, we saw the bullish breakout above, and we've seen continuation of the trend to the upside, so that bullish close above gave us some good confidence. Having it occur below the cloud, however, and a cloud that was fairly close by, meant that confidence was diminished a little bit. We have a target for the breakout from that pattern. It's the width of the deepest part of this pattern projected up from the breakout, and we have an area around this 102.18 area of support and resistance, and there is potential for the market to trade up there, but very strong support around this level. In terms of the Fibonacci extension, and what we're examining here is the current uptrend that the market's in relationship to the previous time that it was trending up. We saw the market take out these minor levels, the 78.6 a few days ago. We took out the 100% level in a bullish way, and the market has traded pretty much to the 161.8% level, and we're seeing some rejection. We've seen this small white body candle, so that is an important level moving forward for tomorrow, and I'd say that that is a very strong influence on this market at the moment, around this 161.8% extension. In terms of the Fibonacci retracement of the prior downswing, we now have an expansion of that retracement. The market had a bullish close up above the 100% level, went on with it the previous day, and we've seen the market close up above the 161.8% level and rejected from that area. So there is potential for the market to trade to higher levels based on that, but the small white body candle around that zone does suggest that the market may not go on with that move. In terms of Ichimoku, we obviously have the market trading below the cloud, so the market has an overall negative bias, but we have the cloud close by, so it will hold as an area of resistance for this market, and if we move over the next few trading days, the market will meet the cloud at lower levels, so very strong resistance offered by the cloud at the moment. The market, however, is bullish in the medium-term and fast-term timeframes by trading above the Kijun-sen and the Tenkan-sen. We had the bullish breakout above the Kijun-sen, which is a bullish signal with Ichimoku, so down around 99.57. Not a lot of confidence with that move, however, because it did occur below the cloud, and they're only fairly weak signals when we have these signals below the cloud, so even though it was a buy, it was a weak buy. But we also had the potentially strong resistance around the $1 level, and we saw the market rejected from there, but a bullish breakout up above there a few trading days ago, and continuation of the trend to the upside now. Looking at the Tenkan-sen, that's pointing up quite sharply at the moment, reflecting this strong momentum that we're seeing in the market at the moment over the previous few days. And generally when the market comes off after we have strong momentum, that's the first area where we see support, and it's usually very strong support. So just below the $1 level, if we do see a change of trend, is a very important level of support. And basically with the $1 level being a strong round number, we know that it will offer itself as strong support anyway. So in big picture terms, we have a market that's bearish, but we're seeing quite some bullishness in the market at the moment in terms of trading above the Kijun Sen and the Tenkan Sen. A small white-bodied candle with a potential type of hanging man pattern, not quite a perfect hanging man, but a potential hanging man, does set the market up for a change of trend. But we do have very strong support down below at 100.43, extending down around to the $1 level. But now we're meeting very strong resistance at the 100.44 level and just above to the cloud. So a market where we may see some sideways action over the next few days.